Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we have some interesting action in the markets yesterday in the charts. There were multiple topping tails that formed after the S&P surged out of the gate, only to reverse and close basically flat. Now, this was key because we saw stocks like NVIDIA, which pushed up early, reversing and actually closing to the downside. That's something we have not seen recently, especially since the semis have been such leaders. GM reported earnings. Their stock is down slightly on the day after taking a $1.1 billion charge on earnings, basically due to tariffs. Interestingly enough, it's showing us that a lot of these companies are probably eating the tariffs rather than upsetting the administration by passing it on to consumers. And that might be why we haven't seen inflation dramatically higher thus far. All right, I did see a headline this morning saying the administration is talking to China about extending the deadline on tariffs. So again, another taco move potentially to essentially kick the can down the road. And the market's getting very accustomed to this. But we're going to delve into the charts right now. We're going to take a look at the S&P. We're going to go through Bitcoin, gold, silver, a lot of major charts showing up here with some key trend lines that we have to be following. So let's go right into it right here. This is the S&P futures this morning. Notice this was yesterday, right? So yesterday we had the big surge up. S&P kind of chopped around in the middle of the day and then ultimately came back in to essentially close flat. Overnight, we saw sideways chop, a little bit of downside in the overnight into early morning, and we floated back up. Notice we're trading basically around the flat line this morning from whence we closed yesterday. All right, daily chart, S&P 500. This is a big deal here, folks. Again, notice the trend line. This is that last major trend line that we have on the charts that has now been broken by price. Notice pivot low from April 7th to the secondary pivot on June 23rd. And here, on July 15th, we closed below it. And even though we've gone a little bit higher on the markets, we have not recaptured it. Tagging. And yesterday, we did get a small topping tail. Topping tails, for those of you that are new to technical analysis, in a textbook, you would see this inside of a section on bearish reversal signals. Topping tails need to occur near highs of charts, closing in the lower 25% of the candle from bottom to top. That's exactly what happened here. The only kind of thing that I would knock this with is that it's a very small candle. Topping tails, the bigger the tails are, the better quality they are. So again, yes, it's a topping tail technically, but it's a very small one at that, which takes a little bit of the power away from it. The US dollar today pulling basically flat. Notice yesterday we broke above a few days ago or last week. We broke above this trend line, never confirmed, but still this line remains as minor support and is acting as such. So the dollar again is holding the line for now. We'll see if it starts to turn back up or if it starts to break back below. If it does, you're likely headed back to about 95.75 on the DXY. The 10-year yield inching down a little bit today. This has been one that essentially is just creating what we call a wedge pattern in the charts. Now, a wedge pattern, again, folks, is essentially a pattern of consolidation. You have a major move from this high down to this low, then a smaller move, a smaller move, smaller move. And essentially that allows you to connect the lows and the highs, and it creates two trend lines that are converging, right? One is descending, one is ascending. And essentially, eventually price will break one way or the other, and you get a big move in that direction. One thing I would just like to point out for those of you home gamers that love technical analysis, you could make a case for a head and shoulders on the 10-year yield. This would be a valid head and shoulders. If it comes down here and breaks, you can actually do a calculated measurement of where this could go. In fact, let's do that right now. Let's just speculate. Let's say that the head and shoulders does trigger, which you would need to break 4.21% on the 10-year yield. If that does trigger, we can draw a trend line from the high of the head to the neckline here. We take that same measurement from the break point. Let's say the break point's here. And where does that take us? To 3.75% on the 10-year. Again, if that happens, what does that mean? It means the economy is weakening significantly in the future. So far, the data has not backed that up. but that is something to keep an eye on. All right. So we'll keep an eye on that pattern formation as well as the wedge pattern. But again, if we break the wedge and then break here, and that makes sense because wedges, when they break, get major moves in that direction. Now, one of the warning signs that I have to bring up to you guys, and this kind of has been popping out at me, right, is that we are seeing the microcaps that are going up 300, 400, 500% in a matter of days. They are now starting to see rug pulls. We saw this yesterday with Open Door Technologies, had run up about 550% over 6 days. Yesterday, in a span of 30 minutes, it collapsed from $5 to $2.80. Let's go to the chart here and take a look. If we go to the intraday, look at this, guys. Look at this yesterday. So this thing was up again from in 6 days, it was up 500% essentially. And in a matter of 10, 20, 30 minutes or so, it collapsed from $5 down to $2.80. It's trading up, but notice that's a bear flag. So warning on that, bear flag formation. Open Door could be going lower. Now, the reason why this gets my attention, you could say, well, what does Gareth, who trades big cap, large cap, mega cap stocks, care about Open Door? Because essentially it tells us what the money is doing. All right. So essentially the institutional money will allow for this to go until they see the end is in sight of this kind of gambling mentality within retail investors. And then they'll just start slamming it down. They'll be dumping, they'll be shorting like crazy. They're essentially rug pulling from the retail crowd that has bought up stocks like Open Door that really has no fundamental reason to be going up whatsoever. They deal in real estate, right? In real sense, real estate's only getting worse and likely to get worse if the economy weakens. So overall, that's how things are looking right now. There's multiple other small cap and mid caps that are starting to dump out. So keep a close eye on this, folks. This, again, is a warning sign that the end is within sight, in my opinion. All right, going to a couple morning movers here. Lockheed Martin getting hammered here in the pre-market on earnings. Nice drop there. It is trading around 425. I do have a couple key levels if we zoom out. There's a zone here between 400 and 393 that should be major support. Why major support? There's a gap fill and a pivot low. Same candle right there. That should be major support. It's about $27 away. This stock could easily go down there. I will be watching closely and likely trading it in the live day trading room if we get there. General Motors, let's take a look here at GM. GM is down, as I mentioned, on earnings, although it has bounced back. Again, a $1.1 billion charge on tariffs. So far, they're eating the tariffs. The question is, over what period of time will they eventually pass that on to consumers? But right now, again, that stock is down just a little bit. Not enough on the daily chart being right here to really get my attention as a trade. First level for me would be around $50. This high, and this high right through here, right around 50, maybe just above $50 on the charts. Robinhood put in a classic top signal 2 days ago here. This was on Friday. So Friday of last week, we got what was called a doji. If you watched yesterday's game plan, I did a lot of deep diving into what is a doji, why does it form. I said that the doji is not as good as a topping tail, but when you have a long-term trend line like this at the doji, that reinforces the bearish signal. Yesterday, Robinhood was down. It's basically flat to positive right now. We'll see where it goes today. But a lot of these high flyers, these favorites of retail, for instance, Palantir was also down yesterday after tagging an upsloping trend line that has marked short-term pullbacks each time, right? So the idea again is we'll watch to see. Palantir is lower this morning. And again, we will be monitoring. And then Coinbase, same kind of deal here. The doji on Coinbase, and look at the same trend line, got tagged. And then the down move yesterday after opening higher on Coinbase, down yesterday, but bouncing back a little this morning as the markets are trying to fight to the upside here. But again, my point being this is that you're starting to see this, the micro caps get rug pulls, right? Where they drop, they go up 400 or 500% and then drop 50, 60% intraday. That again is a signal that the big money is beginning to say, okay, enough's enough. Let's start taking the money from the retail crowd. Then you start looking at big companies like Coinbase, Palantir, Robinhood, these $100+ billion companies, and they're starting to hit major levels and roll over. Then you look at the S&P, which has broken that trend line with now a topping tail. And all of this combining, for me at least, to say, okay, be ready. Be ready for some sort of roll here. Doesn't mean it's today, but again, something is coming up. And then you look at the tariff deadline on August 1st. You look at all these other things with the Powell and the Federal Reserve and the economy, potentially everyone viewing the economy right now, by the way, as well. I shouldn't say everyone. I'm certainly not. But thinking that, oh, it's clear sailing. The runway is clear. This economy can just keep going. That's something that, again, if you look at the VIX is showing complacency. And that always makes me nervous when I see the VIX showing complacency. All right, let's get into a few other charts here. Stock market's going to be opening here soon. I know I'm running a little bit late today, folks, but nonetheless, wanted to get you guys your game plan this morning. But let's go into the Bitcoin chart real quick here. Bitcoin bear flag continues to form. Topping tail is the power trader here. A lot of people were saying, well, why wouldn't this be a bull flag? Right? So why doesn't this move up with bullish consolidation? Because you always take the dominant pattern. All right. The dominant candlestick formation until proven otherwise is the topping tail. So the topping tail becomes the dominant force, and anything off of that, that's your pattern formation. All right. Very, very important right there. And then if we flip over to gold here, gold continues to remain resilient. It's pushing up. Look at the wedge pattern here, folks. It's held so far. Is it going to break above around 34.25 on gold? If it does, you might see a move up to 3,500, which would be your next resistance. Vice versa, if it breaks and confirms below this upsloping trend line, which goes back to December, that would be a sell signal with probably a move down close to 3,000. Silver had a great move yesterday. I saw the bulls out in force, which is great. The question is, can it close above the topping tail high and above this orange trend line? Look for any close above 39.25. That would be bullish to see. 39.25 on silver. That's your break point. If you can get above that, silver has a shot at going above $40 per ounce. Lastly, a couple other charts here, guys. Take a look at crude oil. Crude oil bear flag breakdown in full effect. First support, 63.70. Look for downside there. And then $60 would be your secondary support. I have a really amazing measured move on this to show you, but I'll show you tomorrow in the game plan. So look for that tomorrow. And then lastly, natural gas here, guys. Nat gas continuing to come in. It is nearing support at 318 to 319 right down here. So monitor that level. All right, guys. So all in all, I've gone over some pretty powerful things on this game plan in terms of signals on the charts. Now, let's, as investors, watch what happens today, tomorrow, next week with the Federal Reserve meeting, earnings from Google. We even have Texas Instruments after the bell today. Let's watch and see what happens in this market. I'll keep you guys updated every morning in the game plan, rain or shine, good audio, bad audio. I'm here for you guys 100%. You guys have a great one. Thanks so much. Take